Today we are going to talk about what is investment. Right from our childhood days, knowingly or unknowingly, we have been learning investments in several ways. Well, in this video we will understand investment as a financial term. In simple terms, investment means growth and money over a period of time. This money that we are talking about is in the form of our current assets, and it should also grow to give us future assets. Which means it should be a value add to give us future economic benefits. However, often people get confused between what is asset and investments. So, before understanding investments further, let us first clear the confusion on the difference between assets and investments. An asset is something that you own and has value. Assets can be appreciating and depreciating. Depreciation is when the value of an asset decreases, and appreciation is when the value of an asset increases. Some assets can also generate income over a period of time. Suppose you own a car. Now, the car is your asset if you use it just for your personal purposes. However, there is no growth in money with that car. And as mentioned before, investments are supposed to give you additional monetary benefits. Now, suppose you buy a house and give it on rent. Now, that particular house is your investment as it will earn you rental income. Which means that the money that you invested in buying the property will grow in terms of rental income. So, in this case, your money grows, which means that the house is an investment for you. Now, coming to the types of investments in stocks, currency, commodities, mutual funds, bonds, real estate being the common one. Also, how can we forget gold? Do you think we all hold gold for investment purposes? Well, this is not entirely correct. We also hold gold for the safety in it. Gold is basically the safest mode of investment. Now, coming back to the definition of investment as a financial term as we discussed earlier, investment is growth in money over a period of time. So, the period that we are talking here is the long-term time period. Let us understand this. With the help of an example, Amit and Ajit started their investment in SIP together with 1000 rupees every month, expecting annual rate of return to be 12% per annum. While Amit decided to keep the money invested for 10 years, Ajit decided to keep it for 5 years. At the end of their respective investment periods, due to the power of compounding in long-term investment, Amit earned a return of 2.30 lakhs rupees approximately. Whereas Ajit with the investment of 60,000 rupees could earn only 82,500 rupees approximately. So, what do we understand here? Well, investing is a long-term scenario. The longer time you keep your money invested, the higher returns you will derive from that particular investment. In a nutshell, investment is a monetary asset which is purchased with the idea that it will give you return in future. It helps an individual to beat inflation handsomely, creating wealth, helps with saving taxes, and creates a handsome corpus to deal with different financial goals with ease, thereby gaining capital growth and income. Investment puts one financial life in an autopilot mode and helps an individual plan its financials, which is one of the greatest challenges of life. Thank you for watching. Investments are subject to market risk. Read all scheme-related documents carefully. This video is only for educational purposes. Please consult your financial advisor before making any decision.